From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Tuesday afternoon. I'm Juliette Sarli. Let's get you caught up on the market, and it was a nice rebound today from a 2-week low. We started out very solidly, a gain of around 0.5%. A little bit of a peter in the 11 o'clock hour, and then a bit of a lull, you could say. Remember, there's still so many people on holidays. Trading conditions and volumes still pretty thin, but we have closed higher by around 0.4%. So that does make it a nice Tuesday turnaround for us. Of course, a lot of the lifting today really being done by some of those mining players. It was a bit of a choppy session coming through on Wall Street overnight, but we did have some good momentum in energy. Remember, Brent's still pretty high, material stocks as well. Also, the telcos and REITs are looking good, and the retailers, despite the fact that we are gloomy again. Consumer sentiment, according to the Westpac-Melbourne Institute gauge, did slip further in January. Just really, again, for those who do think that there will be a rate cut in February, adding to that sentiment, particularly as we saw building approvals also fall by some 3.6% in November in data released today. And that really brings us to the dollar dilemma as well, because we're continuing to see this strength in the greenback push the Aussie lower below 62 US cents. Some calls that it could fall to 60 or even lower. Does that then pose a conundrum for the RBA? Some are saying that the RBA will not want to, import inflation if we do have a weak dollar. Others, and David Scott has written a really good piece on this in our View in our afternoon newsletter today, so stay tuned for that. It comes out at 5:15 Eastern to your mailboxes. He says, look, you can't say that just because the dollar is lower, that's not a reason to cut rates. Remember, the dollar was also low during the global pandemic. All right, let's have a quick look at where we are sitting in terms of some of the sectors, and kicking it off with the retailers. They were, as I mentioned, mostly higher today, but you are still seeing some weakness from Premier Investments on the back of that trading downgrade yesterday. Lovisa coming back after that big hit to it following a UBS downgrade last week. Also looking at the energy sector as we continue to see Brent crude oil prices supported. They're at a 4-month high on these expectations of wider US sanctions on Russian oil, which could force buyers in India and China to seek other suppliers. Woodside there up 0.5%. And the miners also doing well on the back of some pretty solid moves, particularly in iron ore, lifting Fortescue by 3% to $18.48. Some of the other stocks on our radar today, Telix Pharmaceutical says it's exceeded its full year guidance, sending shares 3.5% higher. We also heard from Car Group announcing it will discontinue its Australian Tyres business following a strategic review. Investors bought into that, shares up 3%. City Chic Collective, now it did report lower revenue for the 26 weeks in the first part of full year 25, but its update was actually seen as positive by the market, sending shares up by 9%. Star Entertainment rising again. This so-called mystery buyer, we're hearing it's a Macau businessman, snapping up a further 28 million shares in the casino operator. And Energy Transition Minerals up an impressive 21%. The Minerals Explorer is embroiled in a long-running legal dispute with Greenland over its plan to build a rare earths mine, and says its management team would visit the island to foster strong relationships with its government, which could be Donald Trump if he gets his way. All right, let's not get into that, but welcome to the COB, Jonathan Takadina from MPC Markets. Good to see you again.
Thanks for having me.
How did you view today's market action? A bit of a rebound here.
Bit of a rebound. Usually it's a turnaround Tuesday. That's what the phrase is from the trading group. So what happens is, whatever happens on a Monday, Asian sessions tends to overreact in one direction. Europe tends to settle it out, and then US comes in and goes, oh, well, everything's on a cheap and we'll just buy here, and then that translates into a turnaround Tuesday. So we've had a lot of soft conditions. I think the bond yields are kind of still stretching out higher, but yeah, generally it's nice to see a bit of a stop in the selling.
Absolutely. Let's drill down into some of the company news. We touched on Telix Pharmaceuticals. Yep. Tell us what you thought about that move.
Yeah, so I had to listen to the guys on the call today. They both had holds on it. We're long-term bulls on it, so I still think it's going to head on higher from here. But I think from what they are saying that these bond yields are just telling us that the cost of money is just going to keep increasing at this stage. So if you want growth, if you want stocks that will continue to grow, you have to pick it carefully as well. So it's not a case of you can just buy anything and it just keeps heading higher like in the past. So I still like the company as a whole. Obviously that increase in revenue is a great headline, but it hasn't busted out to new highs yet. If it busts out to new highs, I'll jump on board that momentum, but at this stage, I'll wait for a dip.
All right, Star Entertainment, Star Group, this is really interesting. I mean, for anyone who's been to Macau, it really is the gambling hub now of the world. I mean, it's overtaking Vegas. It looks like a Macau businessman is snapping up Star here.
Yeah, so I've had the Star on the call previously a few times and I've just avoided it. But from the chart pattern and the valuation that we are at, and then someone's snapping up levels here, I think it's starting to turn around. So I think it's a buy now.
Really?
Yeah, absolutely. So usually I would be like, look, let all the bad news get taken out, and if it starts turning around, I'll jump on board. But the fact that someone actually sees value at these levels, 28 million shares is quite a large group. I saw another sort of large block moving from JP Morgan as well. So I think we're at levels now that a lot of value players are coming in. So what you got to remember is casinos are great businesses. Like Vegas, Macau, they're all built on the fact that gamblers just keep pouring money into it. They've got the house edge. So obviously it's the same scenario here with Star Group. It's a great business. Obviously they've had the license problems, but I just don't see them losing it. They might get another increase in fines, but if people are seeing value at these levels, I think it's time for a nibble.
Wow, interesting. Okay, and let's talk about more broadly the rotation. So last year's stars, the banks, Morgan Stanley came out last week saying, get out. I mean, so many people have, but you're seeing that move from some of those big winners from last year into some of the underperformers like energy and miners.
Yeah, and that's all on the back of the bond yield. So obviously the bond yields are just, from a simple point of view, is that the cost of funding, the cost of money is increasing at this level, and obviously with the government's going to increase their issuance, and there's going to be a lot of refinances this year. It just tells you that anything that's really, really expensive, they're going to have to really shoot it out of the ballpark for that to continue. So at this stage, the easy trade is just sell the stuff that's had a really, really good run, it's super expensive, and buy the stuff that's cheap. And that means you got to start lightening up on the banks, lightening up on some of the IT, and we've already seen that out of the Mag 7. And some of the cheap stuff is the miners and the energy players. They've been really undervalued. And I remember all of last year, they just had shown no love. And we've had a pickup in a lot of the base commodities and oil itself, and it's time to buy them.
So the likes of Fortescue that I think was 16, 17 a couple of days ago, does that get back up to the sort of 30s?
Look, it's not. We've got, obviously Trump's coming in next week, so a lot can change in a couple of weeks. But I just think in general, the miners have been extremely cheap so far. We've started to see some money flow into it. So I don't know how high it goes from here, but I think it's a safer place to park your money rather than some of the more expensive names.
Now I know, because I had Mark Gardner from MPC Markets on the call yesterday about your sort of overall view on the banks, but do you look specifically at whether there's a better one out of the big four, or you see Morgan Stanley, for example, saying, they're very underweight Westpac, but they're kind of equal weight ANZ, or do you just say, look, they've all run too hard?
Oh, that's a tough one. So just in general, on the way up, the larger caps just get more of the love, or more of the money flows. And I think that reverses on the way back. So if you want to be bearish banks, I think Commonwealth will come back further than some of the other names. So I would actually be more cautious on the ones that have had a great run. That being said, though, we do have a wild card next week. We've had a volatile period over the last sort of 3 weeks with everyone back on holidays. Trump comes in. If the market gets excited again, then you have to be back on the leaders. But just at this stage, I'm fairly cautious. So it's out of the banks, out of the IT, and into the miners and energy. And
when people are cautious, they go to gold, your favourite. Any sort of change on where you see some good moves in the gold players?
I think the fact that the US dollar just keeps powering on higher and gold stays quite level around 2650 to 2700. If there's any retreat in the US dollar, I think it just starts heading higher. So I'm still quite bullish gold, more neutral at this stage, but just the fact that it hasn't fallen just tells me that its store of value sort of properties are here to stay.
And correct me if I'm wrong, was it Northern Star the one that you like the most?
Oh, they're the bluish chip of the bluish chips, and when they bought De Grey and sort of fell back, I'm like, that's a bargain. Like when these guys buy tier one assets, they've just shown that they know how to manage it, and the share prices are being rewarded from there.
All right, Jonathan, always good to get your insights and very interesting. You now see Star as a buy. Jonathan Takadina there from MPC Markets. Well, the stock of the day today was Telix Pharmaceuticals that we were just discussing, and Andrew was joined by Mathan Somasundaram from Deep Data Analytics and Rudy Philippek van Dijk from FN Arena.
It's a really good stock, well managed. They've executed on everything. You've done well. There's no reason that you need to sell, except for the fact that it's extremely expensive. So if you're an existing shareholder, you're not going to care what anyone says. You're going to hold it. And I think that's fair enough. But if you've got new money, are you going to go into a stock that's done as well as it's done now? That's tough. So for me, it's a hold.
It just exceeded the guidance and all of that. So personally, I would stay on board if you own the shares. Whether you take a little bit off is completely up to your own preference. The golden rule is make sure you can sleep at night. The other golden rule I have personally is that you, in stocks like Telix, you don't put too much of your portfolio in there. You know what I mean? You don't want your portfolio to swing around because one stock is doing all the work either way. If you want to get on board yet, I agree with Mathan. Don't chase it here.
All right, let's have a quick look at the leaders today on a day when we did see the market rebound from a 2-week low. Star Entertainment, we mentioned there, this supposed Macau businessman coming in and buying 28 million shares. Very interesting to hear from Jonathan Takadina just now saying, look, he thinks it's a buy at these levels. Johns Lyng, very much a favourite in the current environment. Of course, we're seeing this devastation in California. It is a company that is going to benefit from the rebuild. Whitehaven Coal looking good. Now, I saw Tabcorp up earlier by 6.3%. I wondered if it's because I think Lotto's something like 30 million tonight. And Polynovo up 5.4%. Let's have a quick look at the laggards. Life 360, this was a really divisive one that I had on the call yesterday. Mark Gardner from MPC Markets saying he doesn't understand the business, would not be getting into it. David Lane at Ord Minnett saying that he very much likes this company. West African Resources lower. Qantas fell today as well, along with Karoon Energy and Hub24. In the small end of town, the winners were Energy Transition. We touched on that regarding Greenland. Star Entertainment, of course, there. Peninsula Energy, Highfield Resources and Kinetico Energy. To the downside, we had WIA Gold, Micro Life Sciences, MTM Critical Minerals, Omni Bridgeway and Brockman Mining. Tonight, we are looking for the all-important PPI out of the US, so the Producer Price Inflation Index. Also the NFIB Small Business Optimism Index. Now, the important thing as well to note that we are awaiting PPI and CPI this week from the US, but is the forward reading, the next reading, going to really be even more inflationary as we start to see the effects of the potential rebuild or the rebuild that will happen in California? Don't forget that economy is bigger than the Australian economy, and that could stoke inflation. Some really interesting chats with guests today suggesting that all of that could mean, of course, the Fed is done. Let's have a look at what we're expecting locally. We've got engineering construction activity for the September quarter. So not too much happening. I think I saw that there's one stock ex-dividend as well. But today we did have a good session. Tuesday turnaround, we call it, up by 0.4% there on the CBO 200. When it comes to the overall ASX 200, it rose by 0.5% to 8,231, and of course Star was among the front runners today. Also just seeing most of the sectors, or about half I should say, 6 of the 11 sectors higher, really led by those energy mining players, also telco, REITs, consumer staples, but a switch out of some of the IT consumer discretionary stocks too, as we saw that gloomy read on consumer confidence. All right, don't forget our next event is on January 30th. It is the first of 2025. Time to get it into your diary. High Conviction is a selection of the best ideas for this year across public and private markets. We'll have some of the country's top investors with their high conviction concepts, whether they be themes, strategies or individual stocks. Registration is free and you can get all the details ausbiz.co/conviction. That does it for this Tuesday at AusBiz. Thank you so much for your company. We'll see you from 9:45 a.m. Eastern tomorrow.